I'm Devlin Steele, Director of Education at Augusta Precious Metals, and this is a Touchpoint Update. As always, remember to like this video and subscribe for future updates. We are fortunate enough to live in a country where if disaster hits, like the national health crisis, our government is essentially well off enough to offer financial aid to its citizens. I don't know about you, but I personally know some people who were desperately in need of recovery money during the health crisis. But like many of us, I have a nagging feeling that spending these trillions of dollars will cause problems down the road. We're in good company with that opinion. After the passage of the American Rescue Plan in March 2021, the federal budget deficit is estimated to grow to $3.4 trillion in 2021. This makes it the highest deficit in history. We have yet to see the long-term fallout from all of this deficit spending, but now we have something new to be concerned about. President Biden's recently proposed budget for the next fiscal year. He has proposed a budget for 2022 that is essentially equal to all the recovery money spent to this point, $6 trillion. This is unbelievable when you compare it to previous budgets. For example, the budget for 2021 is only $4.8 trillion. I can't believe I'm saying only. This means the 2022 budget will be a 25% increase in 1 year. But that's not the end of it. He suggests that the budget should continue to increase until it reaches a staggering $8.2 trillion in the year 2031. You might have seen the news recently that President Biden admits that some taxes will have to be raised to make up the shortfall that he's proposing this year. To be clear, it doesn't do anything for the ongoing debt. And it's questionable whether the tax increases will make a dent in this year's deficit. I know that recently we have been talking a lot about budgets and deficits. That's because that is what's happening right now, and we all have to pay attention to it. It could affect all of us. The unreal level of deficit and debt the president and his administration is pushing us toward is likely to continue ballooning. The Committee for Responsible Federal Budget, the CRFB, believes budget deficits will total an unbelievable $14.5 trillion, which will increase the debt by $17 trillion from today's level. Right now, it's only $28 trillion. Again, I can't believe I'm saying only. And the president, in his recently released fact sheets, admits that the cost of these plans would be covered by tax increases. Let me tell you, the math doesn't add up. So what we're going to end up with is tax increases and deficit. But the thing to remember is that no matter what happens with the U.S. economy, if you are a gold and silver owner, you have a chance right now of offsetting losses from other assets. That is, if history is any indication. Precious metals do seem to react positively in times like this. At the end of the financial crisis that began in 2008, gold and silver went on a stunning run of increases for the next 2.5 years. You could see the same pattern last year when the Federal Reserve went into emergency spending mode and the deficit surged 320%. Gold prices shot up nearly 30% and silver rose 90%. Massive national spending isn't the only indicator that precious metals could strengthen. but it certainly is one reason that I believe this is the right time to lean on gold and silver, especially when it looks like there's no end in sight to the remarkable increases in federal spending. For more information about what's happening in the economy and how gold and silver play a role, go to Augusta Precious Metals website and sign up for our free guide. Better yet, sign up for a one-on-one web conference with me or a member of Augusta's education team. We're here to help. Until next time, this is Devlin Steele, Augusta Precious Metals, signing out. If you enjoyed this content, make sure to subscribe to our channel and check back often for more updates.